evening.
Good evening. Our subject today is Advanced Accounting Part 2, and we will tackle the topic of business combination by contract alone and the measurement period. So in this lecture, you can see a unique business combination wherein the acquirer will not gain control technically of the acquiree. This means the majority share of more than 50% cannot be seen in this type of business combination, but the provisions of the business combination contract shall prevail. Here you can see that the acquirer technically has no control, but what make the acquirer gain control by means of the provision of the business combination contract. It's because there were some specific provisions of the contract that the acquirer will gain control even without that specific consideration transferred. Also, the second part of this lecture is about the measurement period, because in a business combination there are some instances that the documents and data are incomplete. So the acquirer is given a certain period which is called in accounting as measurement period. So that measurement period will give an opportunity for the acquirer to come up with a specific amount that will be presented in the financial statements. So let's continue our lecture. So we have here the first illustrative problem. This is about the two companies, Alona Company and Xenia Company. This is an example of business combination by contract alone. Alona and Xenia companies are both engaged in the fast food business. So the two companies are within the same industry, and that industry is the fast food business. This is normal today. Two companies engaged with the same nature of business will combine their forces by means of business combination to avoid competition and further strengthen their customer base. They decided to combine their businesses. So there is a purpose why Alona and Xenia combined their businesses. They want to be strong as far as their customers are concerned, and at the same time they can avoid competition. So on January 1, 2021, Alona and Xenia signed a contract, the terms of which resulted in Alona obtaining control over Xenia without any transfer of consideration between the two parties. So here the contract is very clear. Alona will gain control over Xenia, but no cash payment will be made and no issuance of shares of stocks will likewise be made. It is just a simple contract. What do you think is the reason why Xenia allowed Alona to gain control by mere contract without transfer of consideration? This is an industry practice. One company may gain control with another company without any consideration, meaning the acquirer, in this case Alona is the acquirer, Alona may be influential in the industry. Alona has some business connections. Alona may have some political inclinations. So that is why Xenia allowed Alona to gain control of the business even without transferring any cash or issuance of stocks. So the fair value of the identifiable net assets of Xenia Company on January 1, 2021 is 1 million pesos. This is the amount of assets to be acquired by Alona. Xenia choose to measure non-controlling interest at the non-controlling interest proportionate share of the acquiree's identifiable net assets. So that is the problem. And here is the question. Compute for the goodwill for this business combination. So let's proceed with the solution. So this is a business combination by contract alone. Contract between Alona Company and Xenia Company. So let me explain this business combination. Since this is a business combination by contract alone, the number of shares to gain control of the voting power will be ignored. This means Alona has no control when we are talking of the total number of shares. We cannot say that Alona has more than 50% of the shares of stocks of Xenia. It is by mere contract. This is the meaning of this business combination. As a general rule, for Alona to gain control, she must have at least more than 50% of the voting rights. This is what I am saying. Alona has no more than 50%. But Alona gained control because of that agreement. So in this case, meaning this is an exception to the rule, because the general rule is that you can gain control if you have more than 50% of the shares of stocks. So this case is an exception to the rule. The basis of gaining control is the provision of the contract, not the percentage of ownership, because the contract itself in this case is very powerful. Both of them agreed that Alona will gain control even without the more than 50% rule to become a majority owner. So this is the reason why in the computation of goodwill, the 100% is considered a non-controlling interest. You may notice in this succeeding slide that the non-controlling interest is 100% because this is a business combination by contract. The contract itself in this business combination is very powerful. The contract itself is an exception to the rule. What is the general rule? In order to gain control, you must have more than 50% of the shares of stocks. In this case, Alona doesn't have more than 50%, but by the contract that both of them signed, Alona will become powerful. Let's continue. Here is now the computation of the goodwill to answer the question to the problem. So the consideration transferred is zero. There is no cash payment. There is no issuance of stocks. The non-controlling interest in the acquiree is also 1 million. 1 million is the net identifiable assets to be acquired by Alona. So 100% of that assets is 1 million, and that is also the non-controlling interest in the acquiring. There is no previously held interest in the acquiring because there is no previous investment by Alona. This is not a business combination by stages. So there is no previously held interest. So the total is 1 million, and the fair value of net identifiable assets acquired is also 1 million. Therefore, there is no goodwill. So it is very easy to remember. If the business combination is by contract alone, there will be no goodwill because the non-controlling interest is also 100%. Whatever is the amount of your net identifiable assets acquired, that is also the amount of the non-controlling interest, and you will end up to 0 amount of goodwill. So let's proceed to the next topic that I have mentioned in the beginning of this lecture, that is measurement period. Measurement period is the period allotted to the acquirer to do some measurement of some pending items during the business combination. Because today it is normal when you acquire a business, you may encounter some problems when it comes to accounting records. Some accounting records are not in order, so you cannot obtain all the needed information. In that case, the acquirer, according to our accounting standards, will be given a measurement period to give them ample time to produce the needed information and data related to the business combination. So here are the rulings as far as measurement period is concerned. The first ruling: if the initial accounting for a business combination is incomplete by the end of the accounting period in which the combination occurs, the acquirer shall report in its financial statements provisional amounts for the items for which the accounting is incomplete. As I have said a while ago, nowadays it is normal to acquire a company with incomplete records. The accounting department is not in order. They cannot produce the needed data in relation to business combination. But you have to prepare financial statements at the end of the year because the regulators want financial statements. So in that case, in the absence of data needed for your financial statements, the acquirer, according to the standards, is allowed to provide provisional amounts for the items for which the accounting is incomplete. Provisional amounts means the amounts that will be provided in the financial statements are temporary. Of course, if the acquirer will provide provisional amounts, that will be in consultation with the external auditor, because the external auditor is the one who will issue an opinion on the fairness of the financial statements presentation. So here is my reflection regarding this ruling. The reporting period refers to the cut-off date of the financial statements. If the business combination occurred, example, May 1, 2020, at the end of the year, your data are still incomplete, your financial statements are still incomplete, you have to prepare financial statements whether you like it or not, because the regulators want to see your financial statements. In that case, the acquirer will provide provisional amounts in coordination with the external auditors. So that reporting period refers to the cut-off date. Most of the time, the cut-off date of the financial statements is December 31 of the current year. If the needed data and documents. Example, total net identifiable assets, liabilities, and some data in the shareholders' equity are not yet available before the preparation of the financial statements. Temporary amounts, these are the provisional amounts, shall be provided. And those temporary amounts are based on estimate. Estimate by whom? By the management of the company, by the acquirer, of course, in coordination with the external auditor. Next. The second standard, if new information is obtained during the measurement period which provides evidence of facts and circumstances that existed as of the acquisition date that, if known, would have affected the measurement of the amounts recognized as of that date, the acquirer shall retrospectively adjust the provisional amounts recognized at the acquisition date. Retrospectively means the acquirer will go back to the time of the business combination. If the business combination happened January 1, 2020, and the discovery of the new information was obtained in the middle of the year, the acquirer must go back to January 1 or retrospectively adjust, make an adjustment. The adjustment is retroactive. Retrospectively means the acquirer must go back to the date when the acquisition took place to provide some changes. As I have said a while ago, when the business combination happened on January 1 of 2020 and the new information was obtained June 1, 2020, the adjusting entry must cover January 1. That is the date of the acquisition. If the business combination happened on January 1, as I have said, and the new information about the assets of the acquiree was obtained on March 31, provisional amounts entered way back January shall be changed. So if the acquirer provide provisional amounts at the time of business combination, that should be adjusted upon receipt of the new information. So here is the third standard. Additional assets or liabilities may also be recognized during the measurement period if new information is obtained about facts and circumstances that existed as of the acquisition date that, if known, would have resulted in the recognition of those events and liabilities as of that date. So, if the business combination happened January 1 and there were new acquisition of equipment before the business combination and also liabilities were incurred, but those information were not included in the records, it may intentionally or unintentionally omitted. Those should be included and an adjusting entry should be made. So here is my reflection. Assets or liabilities that existed on or before the acquisition date, not declared, but later on discovered, should be recognized and appropriate adjustments be made. As I emphasized a while ago, there are some instances that newly acquired assets and newly incurred liabilities existed, but these data were intentionally or unintentionally included. Adjusting entry should be made covering this information that omitted during the business combination. These assets or liabilities may have acquired or incurred before the acquisition took place. This is what I'm saying. The acquisition took place but was overlooked because normally newly acquired items or recent indebtedness could be unnoticed. So this is the unintentional. It is not the acquiree has no intention to hide this information. It may be overlooked because normally newly acquired items and newly incurred indebtedness could be unnoticed or could have been overlooked in the recording of transactions. Upon discovery, an adjusting entry should be made to properly measure the business combination. Let's continue. This is another standard. The measurement period ends as soon as the acquirer receives the information it was seeking about facts and circumstances that existed as of the acquisition date or learns that more information is not obtainable. So, here is the measurement period. What is measurement period? The acquirer was given ample time to do measurement because the data and documents are incomplete. So the question is, when is the period ends? The period ends as soon as the acquirer obtains the needed information. But there is a provision here. The measurement period shall not exceed 1 year from the acquisition date. The measurement period will end upon receipt of the new information that they are desiring for, but it will not exceed 1 year from the acquisition date, meaning the allowance is only 1 year from the acquisition date. So here is my written reflection and an example, an illustration of the measurement period that will end on a certain period of time. So Alona Company acquired 100% interest of Xenia Company on January 1, 2020. All the information and data were received on May 1, 2020, and Alona declared that no other information would be obtained. So Alona is lucky enough that as early as May 1, they completed the data and information that they need in relation to the business combination. So they also declared that there will be no other information to be obtained on as of May 1. So the question is, would the measurement period end on May 1, 2020 or January 1, 2021? What is May 1, 2020? That is the date wherein the acquirer obtained the needed information and data. What is January 1, 2021? That is the 1 year period, because the business combination happened on January 1, 2020. It may end, the measurement period may end or have an allowance of 1 year, January 1, 2021. So we are asked, what is the end of the measurement period? Is it May 1, 2020 or January 1, 2021? Let's answer this question. So here is the answer. The measurement period will officially end on May 1, not January 1, 2021. It will officially end on May 1, 2020 because the acquirer declared that all information was obtained and no other information would come in. There will be no waiting. This means there will be no more waiting on the part of Alona. They will wait for nothing because everything was obtained. Whereas if they are still waiting for some documents and information to come, they could wait up to 1 year or January 1, 2021, after which the measurement will officially close regardless whether the information are complete or not. So, the business combination of Alona and Xenia happened January 1, 2020. Alona, the acquirer, received documents on May 1, 2020. But Alona is not yet satisfied with the documents that they received. They are still waiting for some documents. Under the standard, they are allowed to wait. But the waiting will only last for 1 year. And that is January 1, 2021. After January 1, 2021, the measurement period will officially close, regardless whether the data, the documents, and information are complete or not. So, it is very clear in the standard. So, during the measurement period, the acquirer needs information to recognize amounts for the following. So, here are now the specifics. What are the information needed by the acquirer during the business combination? These information are not yet complete. That is why measurement period was created, because the acquirer cannot proceed completely with the business combination. And here are the information needed. Of course, the number one information that we need during the business combination is the consideration transfer. There is no problem about this, because it is the acquirer and the acquiree who will determine the consideration transfer and any non-controlling interest in the acquiree. Also, this is very easy to obtain. The two parties involved in the business combination knows how much is the non-controlling interest in the acquiree. Next, previously held equity. In some instances, the documents pertaining to the previously held equity are not available. There are some instances that the amounts being declared by the acquirer is different from the amount in the records of the acquiree. So, under letter C, in some instances, we will apply the measurement period if both the acquirer and the acquiree are not sure regarding the previously held equity. Next, identifiable assets acquired and the liabilities assumed. This is also another problem when it comes to business combination. There are some assets which are not declared, assets of the acquiree which are not declared, or there are some lacking documents to substantiate the amount of the assets. In the same manner, documents pertaining to liabilities are not complete. They cannot substantiate the amount declared by the acquiree. So, they need measurement period under letter D, identifiable assets acquired and liabilities assumed. Next, goodwill or gain on bargain purchase. So, you cannot compute for an appropriate goodwill or gain on bargain purchase if the information that you needed is not available. So, that is another information that needs to be recognized to make the business combination complete. So let's have illustrative problem number 2, also about Alona and Xenia company. So this is about the provisional amounts of identifiable assets acquired. So we will apply the principle of measurement period in this business acquisition. So let's read the problem. On September 30, 2021, Alona Company acquired all of the identifiable assets and assumed all the liabilities of Zenya Incorporated by paying cash of 1 million pesos. So, it is very clear, Alona acquired 100% ownership of assets and liabilities of Zenya. On this date, the identifiable assets acquired and liabilities assumed have fair values of 1,600,000 and 900,000 respectively. So this problem has several cases, scenario, and situations. So let's take up the first case. Case number 1. Identifiable assets recognized at provisional amount. So Alona Company engaged an independent valuer to appraise a building acquired from Zenya. So Alona is not contented or not satisfied with the amount of the building acquired from Zenya. That building is included in the identifiable assets of 1,600,000. That's why Alona hired an independent valuer to appraise the value of that particular building. Here is now the problem. The valuation report was not received by the time Alona authorized for issue its financial statements for the year ended December 31, 2021. What is the date of the business combination? September 30, 2021. 3 months before the year end. So Alona is compelled to release the audited financial statements because the needed audited financial statements are to be submitted to the Bureau of Internal Revenue, Securities and Exchange Commission, and other regulatory bodies. So, Alona is worried about the value of that building. So, what will Alona do in this particular problem? Because she is compelled to issue audited financial statements with a cut-off date of December 31, 2021. Let's continue. As such, the building was assigned a provisional amount of 700,000 pesos. So now we will apply the provisional amount. We will now apply the measurement period. The provisional amount of 700,000 pesos is just a temporary amount of the building because Alona needs to submit audited financial statements. Alona Company, the acquirer, is compelled to submit audited financial statements. So, she has to assign an amount of 700,000 to the building. As I have said a while ago, Alona cannot do it alone. The provisional amount was provided in consultation with the independent external auditor. Also, the building was tentatively assigned an estimated useful life of 10 years from acquisition date. Also, the 10 years estimated useful life is just provided by Alona in consultation with her external auditor. Alona uses the straight line method of depreciation and recognize 3 months depreciation on the building in 2021. So, why 3 months? Because the date of the acquisition is September 30. So, they have 3 months from October to December. That is why the depreciation recognized by Alona is for 3 months. Let's continue. On July 1, 2022, take note of the date. The business combination happened September 30, 2021. The financial statements cut-off date is December 31, 2021. Now, on July 1, Alona finally received the valuation report from the independent valuer, which shows that the fair value of the building on September 30, 2021 is 500,000 and the remaining useful life from that date is 5 years. So here we can see the difference. We can see the discrepancy between the provisional amount and the final amount. Of course, the basis will be the amount reported by the independent valuer, and that is 500,000. Also, the estimated useful life is affected. It is shortened to 5 years. The question is, how should Alona account for the new information obtained? Let's proceed with the solution. So, before we proceed with the official solution, here is my reflection on this case number 1 of illustrative problem number 2. The audited financial statements of Alona Company with cut-off date of December 31, 2021 was already released upon the receipt of the valuation report on July 1, 2022. Is it late already? The answer is no, because the accounting standards provided measurement period. Even if the official report regarding the building, the valuation of the building was received on July 1, 2022, it is not yet late, because we can do something by this late report received by Alona Company, because there is a big difference. The provisional amount is 700,000, but the reported amount is 500,000. The estimated useful life based on estimate by Alona is 10 years, but the estimated useful life provided by an independent appraiser is 5 years. So there is a big difference. So the provisional amount was assigned in consultation with the external auditor. Remember that Alona cannot do it alone. Alona Company's dilemma now is on how to apply the results of valuation report retrospectively. Solutions provided in succeeding slides will illustrate such application that will solve the dilemma of Alona Company. Because according to the standard, the change should be adjusted retrospectively. In other words, we will go back to the date of acquisition. We will go back to the financial statements with cut-off date of December 31, 2021. So here is the official solution. Alona Company should retrospectively adjust the provisional amount assigned to the building. Adjusting entry is needed. The adjustment shall be charged to the goodwill recognized on acquisition date. We will see how the goodwill is affected by the adjusting entry that we are going to prepare in the succeeding slides. Depreciation expense shall also be retrospectively adjusted as necessary, because there is a big difference. The estimate of Alona Company is 10 years, while the estimate of the independent appraiser is 5 years. So we have to adjust depreciation. Alona shall then restate its 2021 financial statements and provide the disclosures required under Philippine Financial Reporting Standards number 3. So the solution to the dilemma of Alona is to restate the 2021 financial statements. But how can we restate the financial statements of Alona? It was already released. It was already submitted to the regulatory bodies. What adjustment are we going to make? And that will be shown in the succeeding slides. So, here is my reflection. Adjusting entries should be done based on the procedures wherein books are already closed. The books of 2021 are already closed, meaning the adjusting entries will now be done on the open books of 2022. We will follow the procedures in basic accounting or fundamentals of accounting wherein adjusting entries can be made even if the books of the previous year are already closed. The use of goodwill in adjusting the affected accounts is only appropriate since it is an asset account and not part of the closing entries at the end of 2021. The affected account in our adjusting entry is goodwill because goodwill is an asset. Goodwill is not closed at the end of the year. So, adjusting entries regarding the cost of the asset will be charged to goodwill, which is an asset account. Retrospective application is consistent and in consonance with the fair presentation of financial statements. The reason why we have to go back to the original transaction is because we want to present financial statement fairly in the eyes of everybody, especially the investors. So, here is now the computation of unadjusted goodwill. Take note, the goodwill was recognized on the date of the acquisition. So this unadjusted goodwill was done before the receipt of the valuation report on July 1, 2022, meaning this computation of goodwill was done on the date of the acquisition using provisional amounts. So the consideration transferred as given in the problem is 1 million pesos. That is the amount paid by Alona in acquiring Xenia. So the non-controlling interest in the acquiry is 0. Why? Because there is no non-controlling interest. Alona acquired 100% of Xenia. In the same manner, there is no previously held interest in the acquiry because this is not a business combination done in stages. There is no previous investment by Alona to Xenia. So the total amount is 1 million pesos. Let's now deduct the fair value of net identifiable assets acquired. The fair value of identifiable assets is 1,600,000. We will deduct the fair value of the liabilities assumed of 900,000. So we have a difference of 700,000, and that is the net identifiable assets. So 1 million minus 700,000, your goodwill is 300,000 pesos. Again, I want to emphasize that this 300,000 pesos is the unadjusted goodwill. It is not yet adjusted. It will be adjusted upon the receipt of the valuation report on July 1, 2022. 2022. So let's now compute for the adjusted fair value of net identifiable assets, and this was done after the receipt of the valuation report on July 1, 2022. The net identifiable assets are affected because the value of the building, which is part of the identifiable assets, was changed. So we have to make a computation for the adjusted fair value. So the fair value of identifiable assets acquired by Alona from Senya is 1,600,000 pesos. So the provisional amount assigned to building is 700,000. We have to deduct 700,000. Why? Because that should be eliminated. It is not the correct amount. That 700,000 is just a provisional amount. That is why we have to deduct 700,000 pesos. And then we will add the correct amount of the building. That is the fair value of the building per appraisal. Meaning that is the one provided in the valuation report. So 1,600,000 pesos, eliminate the 700,000 and then add the correct amount of 500,000, we will arrive at the total of 1,400,000 pesos. That is the correct amount of the identifiable assets acquired. And then we will deduct the fair value of liabilities assumed. The adjusted fair value of net identifiable assets acquired is now 500,000 pesos. So let's now compute for the adjusted goodwill. And this was also done after the receipt of the valuation report on July 1, 2022. Meaning this is the correct amount of goodwill. If you will still remember in the previous slide, the goodwill that we computed is 300,000 pesos. By this time, we will compute for the correct amount of goodwill. So the consideration transferred is 1,000,000 pesos. Given in the problem, non-controlling interest in the acquiree is 0. Previously held equity interest in the acquiree is 0. So you have a total of 1,000,000. You will deduct the adjusted fair value of net identifiable assets of 500,000 pesos, which we computed in the previous slide. Therefore, the amount of adjusted goodwill is 500,000 pesos. Here you can see the difference. The goodwill that we computed before the receipt of the valuation report is only 300,000. But now, it became 500,000 pesos. So, we have to make an adjustment. The adjustment is 200,000 pesos. So let's now compute of the adjustment to goodwill. Again, this was also done after the receipt of the valuation report on July 1, 2022. So this is the goodwill recognized on the date of the business combination, September 30, 2021. That is 300,000 pesos. The adjusted goodwill is 500,000 pesos as we computed in the previous slide. So the amount of adjustment, which is an increase in goodwill, is 200,000 pesos. So let's also prepare a computation on how much will be the amount of adjustment for depreciation expense. Remember, there was a change. On the date of acquisition, the provisional estimate for depreciation is 10 years. But upon receipt of the valuation report, it is noted that the correct estimated useful life is 5 years. Therefore, we have to make an adjustment for depreciation expense. So, the depreciation expense on the date of the business combination is 17,500. That is 700,000 pesos is the amount of provisional amount for the building divided by 10 years, the provisional useful life multiplied by 3 months divided by 12 months. Why 3 months? That is September 30 to December 31, 2021. So the depreciation expense that we provided on the date of acquisition before the receipt of the valuation report is 17,500 pesos. So the correct depreciation is 25,000 pesos. So 500,000 pesos, what is 500,000? That is the correct amount of the asset, the correct amount of the building reflected in the valuation report. Divided by 5 years, that is the correct estimated useful life, multiplied by 3/12, that is 25,000 pesos. So we will compare the depreciation that we computed based on the 500,000 and the depreciation computed based on 700,000. So we have an additional depreciation expense for 2021 of 7,500 pesos because of that change in amount of the building and also change in the number of years estimated life. So what are the adjusting entries on July 1, 2022? So we will now apply what has been mentioned in the standard, that adjustment should be effected retrospectively, meaning retroactive effect. So what is the adjusting entries? What are the adjusting entries? So let's now adjust the goodwill. Debit goodwill, 200,000 pesos. Why? According to our computation in the previous slide, there was an increase in goodwill. The first goodwill that we computed is only 300,000 pesos, while the second goodwill is presented by the valuation report is 500,000 pesos. So there is an increase in goodwill of 200,000 pesos. That is why we debited goodwill and credit building of 200,000 pesos. Why? Why credit building? Because we will reduce the value of our building. The provisional amount that we provided for the building is 700,000. But in reality, in accordance with the valuation report, the value of the building is only 500,000 pesos. That is why we will reduce the building by 200,000 pesos. Also, we will make an entry to recognize the depreciation expense of 7,500 as we computed in the previous slide, but our debit is retained earnings 7,500 pesos and credit accumulated depreciation of 7,500 pesos. Why retained earnings? Because the books of 2021 are already closed. If the books of 2021 is not yet closed, the debit should be depreciation expense. But since it was already closed, we will debit retained earnings of 7,500,000 and recognize the contra asset account of 7,500 pesos accumulated depreciation. So retained earnings was debited because the books of 2021 were already closed. So aside from the adjusting entries, receipt of the new valuation for the building after The reporting period should be disclosed in the notes to financial statements. So this is very significant. Do not forget to disclose in your notes to financial statements the new valuation of the building. Because your December 31, 2021 audited financial statements reflects a building of 700,000 pesos. And that 700,000 pesos is no longer existing in 2022 upon receipt of the valuation report on July 1, 2022. That is why if you will prepare financial statements for 2022, you have to disclose these changes in the value of the building after the reporting period. And that is making the financial statements fairly presented. So all the information, concepts, data, and illustrative problems discussed in this lecture were taken from the book written by Zeus Vernon B. Milan entitled Advanced Financial Accounting and Reporting. Explanations in italics are provided by the lecturer. So again, thank you very much for watching this video on my lecture about advanced accounting covering the topic of business combination by contract and the measurement period. I hope you learned something with this lecture, and I will provide more lectures covering advanced accounting on business combinations. Thank you and good evening.